don't get in a hurry to get the debt forgiven. Don't get in a hurry. In this video, we're going to look at the new debt forgiveness simplification after the second draw, they call it, their second PPP loan, which we did another video on. Unless we note otherwise, everything we have here today, and a lot of really good stuff, is for both PPP1 and 2. But Debbie, I think before we just jump into it, we got to give a little background, because we've got people that's asking for forgiveness under the CARES Act, under the PPP2, which is a Paycheck Protection Flexibility Act that came out June 5th. And I kind of call that one the second PPP, but it's not, because this one here in the Consolidated Appropriations Act, or known as CAA, there was a subpart called PPP2. What I'd kind of like to do is let's just go on ahead and let's look at the first item, and I'm going to do a cheat sheet here, and it's called the extended covered period. And if you remember, up until June 5th, our covered period was
8 weeks.
8 weeks. And so we had these clients trying to figure out how to spend this money in order, and this was the first part of June, in order to not have to pay part of it back. And right at the last moment, then we got the June 5th. And what was the big item that we had there?
At that point, it changed it to 24 weeks. So you either had to choose an 8-week period or a 24-week period.
So in this act, the big takeaway was in that 8 or 24, it was based on when the loan funds were available. I'm going to call this the PPP2 Act for the rest of this video. Anyway, in the PPP2 Act, it stayed with the 8 or 24 weeks, but the big change is the borrower gets to pick, and what the law actually says, you cannot pick less than 8 weeks and not more than 24 weeks, and you have up to 10 months after that your covered period in order to ask for that forgiveness. So I think that's really good news. The other thing I want to say throughout the debt forgiveness is really a relationship between the small business and your banker. You know, and we get the question, do I have to apply for, because in another video we talked about qualifying for that second draw if you got the first PPP, and one of the things there is the fact that, do I have to go back to the same bank? No. But in this debt forgiveness, you still have to go back to the lender. But to give you an example of how flexible this is actually the lender in this new law, PPP2, but it applies to both, it applies to all debt forgiveness with SBA, is the fact that the lender can actually make up their own form. And we'll get to the form here a little bit later. So again, the takeaway on this one was you get, the borrower gets to pick any of the time period for that. And actually, that's really important for another law change later in the presentation. What I'd like to look at is the next really good news. Not only do you get to pick your period, but now you can get to pick your expenses. And before, now we're not talking about qualifying for the loan, we're talking about getting forgiven for qualified expenses. So under the CARES Act, what kind of expenses did we have that we could, utilize?
You could use your payroll expenses. You could use benefits such as health insurance, matching of your retirement plans. You could use rent or mortgage interest, and utilities.
And you had to spend 60% of that on payroll and payroll expenses. Again, the 60-40 rule still stays. So remember, we still have to spend 60% of this money in our period, our covered period, to qualify for full debt forgiveness. So now with the PPP amendment, we have 4 additional areas of expenses that qualify for that 40% part. And I'm going to kind of look at them here because I've kind of tried to think of some of the things our clients might have. So the first area is covered operational expenses. That might be business software, cloud computing, product or service delivery. I'm kind of quoting this out of the comments made in the House and the Senate on the legislation. So this is kind of out of the law. So my cheat sheet is the law. Human resources, sales and billing functions, accounting, tracking of supplies, inventory, records, and expenses. So that's the first one, covered operating expenses, in addition to, Debbie, the original ones under the CARE Act. Then the next one was covered property damage costs, property damage due to public disturbance, not covered by insurance. Covered supply costs is our third one, for supply of goods that are essential to the operations of the entity at the time the expenditure was made.
Wow.
How about translate that into the tax world? For the supply of goods that are essential to the operations of the entity at the time the expenditure is made. That's pretty wide open. And then our final area, our fourth area, is covered worker protection expenditure. And we saw this same common theme in PPP2 when we did the teacher educator expense. It kind of parallels here. So covered workers protection. And it's kind of anything required, any capital expenditure to meet CDC, to meet Health and Human Services, OSHA, state and local governments, kind of the same rules that we've had all along there. But it includes drive-through windows, indoor-outdoor combined air filtration system, expansion of indoor-outdoor or combo business facility, on or off-site health screening capacity, and other assets related to compliance with the COVID related items. So, and then one thing for whatever in the law, and I want to point this out, this is when you stay up and read too late at night, but it says it does not include residential real property or intangible property. And that seems like they're hinting toward the rental property, the Schedule E. So again, 4 areas expanded. And just to recap, we have the normal, this is to get the debt forgiven, 60% SB payroll, but we can also, under the CARES Act, have rent, utility, mortgage, interest, transportation, and utilities. Under the new area, we got 4 new ones. Again, I'll just title them covered operational expenditures, covered property damage costs, covered supply costs, and finally covered worker protection expenditures. Quite flexible. So that is good news. The next thing I'd like to look at, and again, there was a lot of new law changes in this, and as I probably can't say it enough, this is actually a lot of good news. I mean, really good news. Insurance payments included in payroll deduction. There was a question out there, what all is included in payroll costs? And this is also important in hitting that 60%. So this is an additional, more of an expanded or an explanation of what payroll costs. It includes group health, group life, disability, vision, and dental. So that will help you qualify for the 60% of the coverage. So that's good. Probably what a lot of us have been waiting for is probably our next topic, and that's this new simplified forgiveness up to $150,000. So Debbie, you want to kind of lead into it?
Yeah, so at this point, if your loan was under $50,000, then you had a really simplified version, down to actually just 1.5 pages, I believe it was. It was a 3508S. Now they're saying basically what the law has told us is now that 50,000 has went to 150,000, and it's supposed to be a 1-page form that you're going to fill out. We are speaking of it as supposedly because we don't have the form yet. It's not out. We're looking at, we've seen multiple dates on when it's supposed to be released by the SBA. So we're still watching for that. Basically, if your loan's under 150,000, I would hold tight on getting that loan forgiven, since you don't have to fill out all the extra pages that are out there.
And I think to kind of summarize that a little bit, don't get in a hurry to get the debt forgiven. Don't get in a hurry, because here's why. As Debbie just said, there's places in this one presentation, there's 2 places that it says that SBA has to give guidance within 10 days. We got one place where it's 24-day guidance. So here over the next 2 or 3 weeks, we're going to see a lot of guidance. As that comes out, we'll do videos to update that. But I think the important thing here is to realize all these good news benefits, is the fact, for example, on the 150,000 less. I mentioned about 2 minutes ago that the lender, the bank, your bank that you got the loan with, can make up their own form now. And that form actually is required only to have 4 elements: number of employees, amount of loan spent on payroll costs, total loan value, and attest to the PPP requirements and maintenance and maintain appropriate records. So it's literally, it's going to be 1 page. And the other thing in the law, they've actually almost transferred the liability from the financial institution, the bank, to the lender. So when you file this one form, you still have time for SBA and or the bank to ask for documentation. Before, under the CARES Act, we were providing the documentation. Under this one, the big takeaway, you don't have to provide it, but you are attesting to it.
Right.
And in that light, you still have to keep that documentation. In this particular area, the SBA has 10 days, so the clock is running to issue guidance on the 150 simplified process, and they have 24 days from the signing to release a new application. So again, the next 2 or 3 weeks, we're going to see a lot of good news. And I think just kind of get ready to wrap this up. Before we leave, a couple other items that we'll cover in other videos, but in this debt forgiveness, it's not taxable income. That's what we've been telling you. But the other thing, we've got some really good news, and again, we're going to cover that over in a tax and accounting presentation, but we'll tell you here. It's the fact that the expenses that you use to get this debt forgiven, prior to the CAA, the PPP2, whatever we're going to call this major law change in December of 2020, is the fact that it's a reversal, and we now know that these expenses are deductible. The only other thing as a teaser, I will tell you, we now can have PPP loans and we can have the employee retention credit, both. We never could have that until this new one. And in that video, we're going to be talking about how to maximize when to have your period of your more than 8 weeks and less than 24. So with that, that's really good news. And then probably the final great big change is the EIDL, the Economic Impact Disaster Loan Grant. And in that you can have from $1,000 to $10,000 forgiven. And the thing there was it reduced your debt forgiveness. So for all of you out there that go, here's what I want to know about, is I already got my debt forgiven. And we had several clients that have an EIDL. Well, that's going to be part of this guidance in the next 24 days, because they're saying now you can reapply to adjust that debt forgiveness, which appears to be, you should be able to go back to your lender and get an additional, whatever that EIDL was, you should be able to get that additional debt forgiven.
Right.
And it's not income. So, please stay tuned. There's a lot of new guidance coming out in this area, but we wanted to get out to you. When you're going to go through this debt forgiveness, there's a brand new set of rules, and it's simplified. And don't get in a hurry, because there's a lot of new guidance coming. So, Debbie, anything to wrap with?
Stay tuned. Watch for more videos.
And if you'd like to follow up videos on these guidance and stuff, just hit the like button, and we'd love for you to subscribe. Again, hope this helps, and see you in a future video.
Thank you.
You're welcome.